The ECB and the Canadian banks have cut interest rates earlier this week. Will this set the trend for the Bank of England to reduce interest rates on the 20th of June with the next meet? Well, unfortunately for property developers, it doesn't look quite that positive, as much as I'd like to believe otherwise. And yes, you would expect that at 2.3% inflation, which is where we are currently, that would be almost close to the target of 2%, but inevitably and what the bank was expecting was about 1.9% inflation. So it hasn't quite met their target. So at that 0.4% difference, they don't think they're ready to start cutting interest rates just yet. Obviously, the Conservatives would have desperately wanted that rate cut to happen, which would trigger a lot of movement in the housing market, which is quite flatline at the moment, although we are seeing a surge of instructions coming on and the rental market is buoyant as always. So guys, what does this all mean? It means everyone's affected. It's a circular economy, and so is property. Basically, homeowners will have to wait it out, wait for the interest rates to drop, and then they'll have to push those decisions even further away in 2024. Developers will have to bear the pain of higher borrowing costs. You may have lots of your deals, whether they're HMOs, developments coming up to the end of their fixed terms, or their developments and going into fixed terms. But you might not be able to get that extra edge that you were hoping for from lower interest rates. I've recently remortgaged a multi-unit block of flats in High Wycombe at 5.69% fixed for 5 years with an additional 5% fees. So guys, the numbers, the borrowing figures are very, very high right now. And this elongated period of longer interest rates, which is quite historic in its own way, is just dragging on. Well, what does this all mean? Once again, it does mean that people who need to sell their deals, whether they are homeowners coming out at the end of the fixed years, developers not being able to manage or pay off their borrowing costs, may have to come out of construction sites earlier, may have to be repossessed. There's a lot of repossessions on the increase. Businesses are obviously suffering as well with the higher borrowing costs, whether that's for working capital, for goods, on credit, all those things. So guys, it does mean, however, that there is this huge opportunity in this challenging space for developers like you and I to come in and swoop those below market value opportunities where people are not being able to pay their debts or service their debts. Look no further. We've got 5 auction traders at the Next Titans event on Thursday, the 13th of June, who is going to be sharing some incredible deals in the June and July auction catalogues. And they will be sharing angles that do work or they don't. So if you're looking for some live deal analysis, you're looking to bring your own deals and speak to these experts on a one-to-one basis, or you're looking just to network with over 100 people in the room who are also experienced, committed property developers, investors, and property professionals, look no further and book your tickets now. It's teamtitans.co.uk.